Hey guys, welcome back to a brand new video. I'm RexFinance, and today, well, I guess I'm technically that guy that gets his information from a Cheerio box. Let's see, my most recent video here, that was the most popular comment. I even gave it a thumbs up. He said, Mad Max said, this guy getting info out of Cheerio box. Well, that danged Cheerio box is pretty danged accurate, okay? Because in this video, I titled it, Goodbye Stock Market Crash, It's Been Fun. This was not a very popular video. You know, you see 113 likes here. There were plenty of dislikes. YouTube doesn't show how many anymore, but I can see on my end, people were not a fan of my thesis in this video, and it's kind of been that theme on my YouTube channel ever since October of 2022, when I said that the stock market had bottomed and that I didn't think there would be a recession and that inflation was going to go way down really fast over the next 12 months. But yeah, everybody disagreed with me then as well. That's why being a contrarian seems to work so well in the stock market. Anyways, since I posted that video and so many people disagreed with me, which I'm bound to be wrong too. I maybe just got lucky this time, but man, we've been the most accurate YouTube channel on YouTube. Not much content since October of 2022, but the content I have put out since October 2022 has been the most accurate stock market content on the internet, and I'd sign my life away with that when you can go back and watch all my videos that you may have missed. Anyways, since I posted that video, the Nasdaq's up 11.5%. So a really dang good month. But today, we don't really care about the Nasdaq. So let me just X that tab out. Instead, we're going to be talking about small caps. Now, back in October of 2022, you'll hear me reference that video quite often. Ever since I posted that video, and even in that video I've mentioned several times throughout the last year that I felt the stock market was going to rally heavily, but that small cap and high growth companies would need the cost of capital to officially peak before they would start to rally. And unfortunately, it's been another really rough year for small caps. So when is this going to end? Lucky for you, that's what we're talking about in today's video. I'll just show you really quickly. The Russell 2000 this year up 2.7%. That's in comparison. I shouldn't have closed out the Nasdaq tab yet. That's in comparison to 47% return for the Nasdaq. So small caps have really stunk it up this year. Over the past 5 years, small caps are only up 16.7%. And typically, small caps actually command a premium to the rest of the large cap and mid cap companies because they have more growth potential in front of them. So they trade at higher valuations. But that hasn't even been true. You see, if we look at forward PE ratios for large caps, mid caps, and small caps, again, I feel like I've pulled up this chart on the screen about 80 times on my YouTube channel, but it just doesn't change. Small cap valuations right now are at historical lows, like close to the historical bottom. Anytime small cap valuations have been this low, it's turned out to be a great buying opportunity. You'll see that small caps generally command a forward PE multiple of 17 to 18 to maybe even 19, and that's in comparison to large caps, which on average probably trade around a 16 or a 17 forward PE. Right now, small caps are trading at 12.8. That's not a typo. 12.8. So what needs to change in order for small caps to finally hit their bottom and go up? By the way, if you've been following my channel, you would know that my personal portfolio currently is heavily positioned into small cap companies because I think small caps are about to take the world by storm. I think that's an appropriate use of that phrase. I think small caps are going to have a tremendous year next year as rates come down. Again, let's get back to that. We need the cost of capital to peak in order for small cap companies to go up. And it makes sense. Small cap companies, yes, have the most growth potential in front of them, but they also demand the most capital in order to obtain that future growth. So they either need to obtain capital via debt or equity. When interest rates go up, debt is not an option. That would bankrupt the company because these companies don't have the greatest cash flow, which means they can't pay off their interest in the debt they take out on their company. You've also seen as a result of that, their stock prices fall. So they've largely been unable to sell equity in order to raise capital, which is another problem. So cost of capital is a huge equation for small cap companies. I've already said that about 4 times in this video. I apologize. I'll probably say it again. But when can we expect this to happen? And that's a really good question. Today, actually, just this morning, we officially got the word cut out of one of the Fed's voting members' mouths. Fed Governor Chris Waller on rate cuts said, "If you see this lower inflation continuing for several more months," I don't know how long that might be, 3, 4, 5 months, "you could then start lowering the policy rate because inflation's lower." This is the first time we've had a Federal Reserve governor start to talk about legitimately lowering the federal funds rate, which if interest rates start to come back down, the cost of capital comes down, and it starts to allow these small cap companies to obtain cheaper capital. I'm sure this is going to be overlooked by the broad stock market, but I'm not overlooking this. This makes me even more confident in my portfolio being so heavily positioned into small cap companies currently. And part of my thesis in this video that I posted a month ago was that I felt the rate hike cycle was over. I said, the rate hike cycle is over, cuts are coming. And now all of a sudden, there's more and more market participants that are starting to agree with that thesis, which is why you've seen the stock market go up. And I expect it will continue to do so. Now, we can talk all we want, but let's look at what the markets are forecasting. Obviously, in the December meeting, which takes place on December 13th, the federal funds rate is expected to remain the same at 525 to 550 basis points. You can see that on the screen here. For the January meeting, the same thing is expected. No rate cut, no rate hike. Still a pause. For March, though, things start to change. There currently is a 32.5% chance of a rate cut in March at the March 20th Fed meeting. And as we get further and further out into 2024, the rate cut probabilities continue to go higher and higher and higher. Now, this is natural, right? Of course, the market's not going to be super certain about what the Fed's going to do, but largely what the Fed has done is they follow what the market is predicting because they don't want to spook the markets. Right now, they are winning the battle against inflation. In fact, I've said before, and I still agree with this, the Fed has won the battle against inflation. The only way that they can lose is if they let inflation expectations get out of control, or if they lose their credibility. If they lose their credibility, nobody is going to believe them or trust them, which is a problem when you're fighting inflation. That's why the Fed typically follows the federal funds futures, which is where the market predicts what is going to happen with the federal funds rate. Now, something else that's really interesting, it's largely been the cost of capital. But another thing that's very interesting, and you can see this all over YouTube, you can look at my channel. I used to get over 10,000 views a video. Now I get 2,000 to 6,000 views a video. And that's pretty dang good. I've retained much more of my audience than a lot of other YouTubers have. And for that, I thank you. If you're new here or returning and not yet subscribed, subscribe down below because this is a great community. But another problem for small cap companies is generally, the people that invest in small cap companies are retail investors. And what's happened? Robinhood from 2021. In 2021, Robinhood had 22.5 million active users. That number in 2 years has been cut in half. It's been cut by more than half. There are only 10.8 million active users on Robinhood's platform. And this is as Robinhood's platform has gotten much, much better. They've lost more than half of their user base. This is very, very telling. Right now, nobody cares about the stock market. If you're watching this video, you are a rarity. Let's talk about this, okay? like in 2021, let's go back to 2021. You could go to a party and talk about the stock market and your portfolio and what stocks you want to buy, and you'd be the most popular guy there, right? Everybody would be around you. Everybody would be listening. Everybody would be talking about the stock market. Now that's not the case. If you went to a party today and started talking about your stock market portfolio or which stocks you were buying, you'd be sitting alone in the corner by yourself, talking to the wall. I mean, literally, nobody cares. Nobody cares. I used to have friend after friend after friend after friend, after acquaintance after acquaintance, after family member text me, call me every single day. What should I do in the stock market? That very rarely happens anymore. It still happens every once in a while because people know who I am, but very, very rare compared to how often it happened in 2021. But just like the stock market is cyclical, so is the popularity of investing with retail investors. Eventually, this cyclicality is going to cycle back around to a point where retail investors are very interested in investing again. Eventually, we will reach that point, and I believe that point is going to be, again, as the interest rates, the federal funds rate starts to fall, and people have more disposable income where they can choose to invest their extra money. Right now, people just don't have a whole lot of extra money. They have plenty, but they don't have a whole lot of extra that they want to store away in an investment. And furthermore, when you can buy a T-bill and get 5% return risk-free, it's kind of silly when you think about it to put your money in the stock market if you're just an average person. Why would you not get the 5% risk-free instead of risking your capital buying the stock market? And sure enough, with all of this being said, small caps found a bottom on October 27th. Seems like a random date, but this is when people started to actually believe that the rate hike cycle was over and that rates are more likely to go down than they are to go up from this point forward. Ever since then, the small cap index, I choose the ticker symbol IWM to track my small caps. Ever since then, it's up basically 10%. That's 10% return in a month. That's pretty dang good, right? I think this is going to continue. The NASDAQ has done the same. We already covered that. I think this is going to continue. I believe that on October 27th, our Santa Claus rally officially started. Now, today, over the last 5 trading days or so, I'll go back to the NASDAQ chart to show this. The market's been pretty flat. Over the past 5 days, up 0.06%. I firmly believe that's because the NASDAQ went up 12% over the past month, and the IWM went up 10% over the past month. The markets are cooling off through time. They're not going to sell off, guys. I firmly believe that. I don't believe the stock market is going to sell off. I believe we're going to correct through time here before resuming the Santa Claus rally throughout the rest of 2024. And this is also pretty funny. Nobody likes to pay attention to crude oil prices or gasoline prices, but this is perhaps the most important thing for both the stock market, inflation, and the economy. You see, since September 27th, crude oil prices are down by 16%. Energy inflation will remain moderate through November as a result of this. Energy is a big component of the overall CPI rate. Also, gas and oil prices feed into everything. It feeds into businesses. It feeds into consumers because everybody has to pay for transportation and heat, etc., somehow, some way. Everybody, every business, and every person. A 16% drop in basically a month and a half is going to be very, very helpful for consumers, the economy, businesses, inflation. This is a very, very good thing to see. And I hope this continues, and I believe it will. You remember when all this Middle East conflict flared up and everybody was so concerned about oil prices? Again, being a contrarian usually is the way to go. Everybody thought crude oil would spike, and it has done everything but spike. And then the last note that I want to make is another one I've said before in videos, but there's actually a chart for it now, thanks to Yardeni Research. I'm probably covering this up, so let me zoom out. you can see that the U.S. import price for Chinese goods in October was down 2.8% year over year. So right now, China, the Chinese economy, is exporting deflation directly into the United States economy. This again is very, very helpful to consumers, businesses, inflation, the economy, all of the above. And as Governor Waller said this morning, rate cuts could become possible if inflation continues to moderate, and it will continue to moderate if oil continues to fall and if China continues to export deflation directly into our economy. And again, we can go back to August of 2018, and ever since August of 2018, the small cap index has been flat. This is going to change. Everything in the stock market is cyclical. There will come a time when small caps are the hot stock again. There will come a time where the Dow Jones Industrial Average, the large caps, they take a breather while the small caps start to pick up the slack. It's going to happen, and I think it's going to take the markets by surprise because largely throughout 2023, outflows have continued for small cap companies, which is just ridiculous when you look at the valuations on small caps currently. But with that, guys, I just posted a members only video today discussing my portfolio strategy for 2024. If you want to see that, hit the Patreon link in the pinned comment or hit the join button located right next to the subscribe button. With that, have a great rest of your day. Stay blessed, keep 10 toes to the ground and your chin up. Peace out.